Hello and good afternoon to all my interested investors out there. Hope you're all doing well today. Today I'm going to be talking about another stock which I hold in my model portfolio, and that stock is Roku. What is Roku? I'm going to give you a slightly edited definition from MarketBeat. Roku, together with subsidiaries, operates a TV streaming platform. The company operates in two segments, platform and player. Its platform allows users to discover and access various movies and TV episodes, as well as live sports, music, news, etc. It provides advertising products and manufactures, sells, and licenses TVs under the Roku TV name, as well as subscription and billing services. In addition, the company offers streaming media players and accessories under the Roku brand name and sells branded channel buttons on remote controls. There are two main reasons I'm doing this video on Roku. First, it recently surpassed 50 million active members. As you can see from their newsroom, they released this press release on January 26th. Secondly, the stock has been doing very well lately, making new highs. As a matter of fact, today it's probably 3 or 4% off of its all-time high, which was achieved last week. Although you may have only become aware of Roku lately like me, it has been around for a little over 18 years. They are considered to be one of the pioneers of streaming TV, and they compete against some heavy hitters, including Hulu, Comcast, Apple, and Amazon. Its main competitive advantage is the ability it gives users to avoid having to log into different streaming platforms in order to view different content. In other words, you can watch different content from different services such as Netflix and Hulu on a single device using the internet. Taking a look at Roku on Yahoo Finance today, as I said before, the stock is about 4% off of its all-time high. It doesn't have a PE at the moment because its earnings in the past 12 months have been negative. I placed Roku back in my model portfolio in August when it was around 166. In absolute terms, it's been the best performing stock in my model portfolio. You can see the average trading volume is about 5.2 million shares, and the stock's beta is 1.93, which means it moves up and down about twice as fast as the market on average. There's quite a lot of options action on Roku at this point in time, and I would say that those options lean more heavily towards the call side rather than the put side. If you go to the 1-year price chart here, you can see that the stock's significant rise started in mid-September, right around here, when the stock was around $193 a share. That was when they had made the announcement that they would be adding the Peacock network to their list of providers. And that at the time, that speculation was that they would be trying to add HBO Max as well as the next big addition to their content offerings. And that's exactly what happened on December 16th. And the stock at that point in time was about $325 a share. At the bottom of the price chart, you'll see my two favorite indicators, the MACD and the shaft trend cycle. You can see there was a clear buy signal flashed here on January 7th, and when the stock was about 379. At present, the shaft trend cycle shows the stock in highly overbought territory, but that signal is not confirmed by the MACD. You can see right now it reached 28, which still means a solid buy. Next, if we go back to MarketBeat, we can take a look at the analyst ratings. You can see here that there are price targets ranging from $365 to about $475. You can also see that JP Morgan just initiated stock coverage of the stock on the 19th of this month, and they set that price target at $475. You can also see there's been a lot of price target boosts in the past couple of months, and you would have to say that's definitely an encouraging sign because it means the analysts are not spooked by the continuing rise in the price. The next thing you want to look at is the earnings estimates and the next reporting date. For that, I always use earningswhisper.com. And you can see here that the next reporting date is listed as February 11th, but you can see that there's not a check mark in that box, which means that that date is not yet confirmed. So I would not say that date is written in stone. It will probably be subject to revision as the actual earnings date approaches. You can see that the consensus estimate is a loss of 8 cents, but the earnings whisper number is a positive profit of 3 cents a share. So you might think that there are, that's definitely an indication of an upside surprise in the earnings report. The next thing you want to see would be earnings revisions. And for that, I use Seeking Alpha. And you can see here clearly that there have been 17 earnings revisions, upward earnings revisions for the upcoming quarter, and 0 downward revisions. That's also have to be seen as another encouraging sign. The last aspect of their earnings report you want to look at would be a summary of the earnings for the past 4 quarters. And if you take a look here, you will see that although the 3 out of the past 4 quarters have been negative, they have also been positive surprises. In other words, an EPS estimate of minus 14 cents, and they reported minus 13. Here it was minus 47 cents, and they reported minus 45. And here it was minus 55, and they reported minus 35. And you can see for the last quarter reported, they was actually estimated to report a loss of 39 cents, and they actually reported a positive gain of 9 cents. And the upcoming quarter, as I showed you on Earnings Whisper, is a positive 3 cents, while the estimate is minus 8 cents. So again, they are looking for a big positive surprise, moving to positive territory for earnings. Now, the last piece of data you would want to see would be institutional ownership. And I'm going to go to MarketBeat again. A scan of the page shows some reduction in the size of the position by some firms, which makes sense as the stock is making new highs. Obviously, they have to lock in their profits for their customers. It's also significant to see that none of them sold all of their holdings, the largest reduction being about 54%. There was also a significant rise in the position of one firm, as you can see right here, as the stock is making new highs, which to me signals their belief in the continuing potential of the stock. You can also see that Roku does not represent a significant portion of the portfolio for any of the firms which are mentioned here, which may be due to the fact that the price of the stock is pretty high, but that's really just a guess. I don't have any idea how much money is in the funds that are being mentioned here or what their investment philosophy is. But my overall opinion is that the positive factors far outweigh the negative factors for Roku, so you may want to consider adding it to your portfolio. Now, last but not least, I have a big announcement today. Today is the day that my ebook goes on sale. The title is the same as this channel, Live Long and Profit. The subtitle is Stock Evaluation Skills for a Lifetime. There is a link to buy the book below this video. It's only $9.99 and available exclusively in Kindle format. There is a link to download the Kindle app on the same page as the book itself. I think you will make back the money you spend thousands of times over if you read carefully and absorb what I'm telling you. If you like this presentation, please subscribe, ring the bell to be notified of future posts, and leave a comment if you wish. I wish you all have a great day. Thank you.